All right, good morning. It is time for another Wednesday show. Today is Wednesday, June 16th, 2021, and I'm back with another live show here where we're going to take a look at the markets real quick, and then we'll take a look at the open trades and see where everything's at. And by the way, today, as you certainly know, is Fed Day, where the Fed is going to announce. Obviously, there's going to be no change in interest rates, right? So, Fed announcement day is always a big deal, but with interest rates basically at zero, it's not like they can cut rates, right? So, everything right now is based on is revolving around when the Fed's going to taper. So the first thing that everyone is going to worry about and be discussing is when the Fed is going to taper their asset purchases, which means that, they'll come out with some sort of a schedule for reducing their bond purchases. I think they're buying what, 120 billion dollars a month worth of bonds, and so, eventually this cracks me up. I mean, they've kind of painted themselves in the corner, and they have a very tight rope to walk. And so basically, a lot of what happens in the market going forward, obviously, and what's happened in the past is based on what the Fed's doing. And so it's pretty important. Now we've seen this song and dance before, right? The whole thing about, was it the Bernanke was going to he tapered, and then Yellen was going to raise interest rates, which comes next, right? I mean, first they have to taper their asset purchases and stop expanding the balance sheet, which, by the way, has reached $8 trillion recently. So, I mean, you can get really deep into the weeds talking about monetary policy and the Fed and how it affects the market and all that kind of stuff. But I mean, it's relatively important, right? I mean, got a chart of the S&P up here, and so basically, we had the pandemic sell-off where the S&P lost, from high to low 35% in a very short amount of time, and then the Fed, pulled out the bazooka and turned the whole thing around. And so the Fed's balance sheet has grown, the money supply's gone ballistic. I mean, everything's kind of crazy, and so this is a direct result of that. And so anyway, when the Fed starts talking about tapering, then the market's probably going to get a little more volatile. And so what they have to do today is pretend that the economy's great and on the mend and everything after the pandemic. See, it used to be they would talk about, I mean, literally 10 years after the fact, they would talk about the recent crisis, which was the 2008 crisis. And so they basically pulled out the exact same playbook for the pandemic crisis, which is to, create a bunch of money out of thin air and and buy assets with it, right? And expand their balance sheet and basically like bail out the economy. Um, which, obviously, and then you get into the inflation debate because now that's what everyone's talking about is I think it was just last week, the inflation numbers came out, CPI. Huh. Looks like I had a little glitch in my recording, but that's kind of weird. But anyway, so I could talk all day about all that, but it's kind of meaningless. So let's dig right into things here. I did see a note last night somewhere, or someone posted that the S&P 500 has not moved from high to low, has not moved in over a 1% range for 17 days in a row, which hasn't happened in, many, many years. And so this looks one of these 2 days would have been the last 1% move. And so, I mean, when you zoom out on this chart and you look at, the last 17 trading days, it's just been really dull and sort of range bound. And I mean, I guess you could say, well, the trend is clearly up, but this little area that we're in right here is just kind of, you know, and the funny thing is, here we are up at the all-time highs, and we have like no range whatsoever, no real action, and so today could potentially change all that, right? A lot of times, Fed Day marks. I've seen this in the past. As a matter of fact, there was a period of time. I've been doing this forever, but there was a period of time years ago when maybe it was during the Yellen tenure, Bernanke or something like that. But on the S&P chart, like each Fed day, I'd have like the Fed days marked on the chart, and they were inflection points. Like you'd get a Fed announcement, and then that would cause a sell-off. And so, maybe we get back to that. I don't know. It's hard to say. But last thing I want to say about the Fed is that, Powell needs to come out and say, hey, the economy's expanding and we're back on track and the pandemic's coming to an end and everything's great. But at the same time, there's risks, and so, we're not going to ease up on I mean, they've got their foot on the gas, so to speak. And so that's, a big part of what's driving this market higher. But we've kind of reached some sort of weird little point here where there's no volatility and the participation in, seems to be kind of low and everything's kind of everything's kind of weird. It needs a catalyst. I mean, for one thing, I was kind of expecting, when we got this recent breakout here, like that it looked to me like, it was coiling up with all these sort of tight ranges and that, and then we were going to get a big, sort of breakout, big long range up move, at least for a couple of days, something like this, or, but it's just kind of strange. So you get these nominal new highs, just barely, intraday highs. Market hits a record high, and then doesn't really do anything, or it ends up down a little bit. So we're in a really kind of strange time. But of course, like I always say, it's a market of stocks, and individual stocks, on the other hand, are like the exact opposite of the market. Individual stocks, um, a lot of them are extremely volatile. I have a big watch list going here, and on a day-to-day basis, I mean, these stocks, there's some stocks out there that literally fluctuate, double digits almost on a daily basis. And so, anyway, we got a pretty good list of open trades here. And so, as you recall, we go back to this. So, we go to like say ARK, right? I don't know why I've been using this as a proxy, but this is, a decent proxy for momentum stocks. And so, anyway, so, this little sell down here and then this kind of rally in like some of the tech stocks and momentum stocks or whatever. Anyway, this set us up. This actually set us up for, a bunch of pending trades. And then when this little leg right here, and you can notice the dates here too. We had a bunch of stocks trigger in right in this area right here, and I think a handful on the 20th or whatever. So anyway, here's the open trades. You can see the dates here. 520, 521. That kind of coincides with that little sell-off coming to an end in some of the momentum stocks. So you can see, I mean, these, obviously Pfizer, its its own sort of animal, and Shake Shack, right? So we got a pretty good representation here of different sectors, and some of these that have been open for a while here. I mean, we're approaching a month here on these bottom few. So Shake Shack has been extremely volatile. That's one that on sort of a day-to-day basis, it's been extremely volatile. So anyway, I thought maybe we would I have these charts all marked up. So what I want to do is we'll start with the ones that just triggered in. They're not really doing much here, right? The ones that just triggered in, like this alarm.com, it's just basically, hanging out in this little range right around the trigger. you can see the, well, let's zoom out a little bit here. So there you go. Trigger, stop, target, and it is just it's kind of weird because the way that I have it marked up in the ranges or whatever. I mean, I can only zoom into like right here and get a good stop at it. But so it's not really doing anything, but I mean, it just triggered in like literally yesterday, right? And so here's one thing to note about this is the trigger was 82.75, like right there. So the first close above that, this is the day that it triggered in, which makes it a buy the next morning as long as it's over the trigger price. So this opened a little bit lower yesterday. The open was 82.70, and so basically this one triggered in right at the trigger price, right? That would have been the price to get in. So that's always kind of nice. It's a little unusual because a lot of times we don't, well, recently I should say, we haven't seen these sort of gap downs on trigger day. So this one gapped down and then eventually traded at the trigger, so triggered in, and then of course, sold down. But today it's coming back. So yeah, I mean so today's only day two of this. Just getting started. This one is this one triggered in and immediately started pulling back a little bit, which is, I won't say it's typical, but we see it sometimes. So it's kind of rare. Well, it's actually pretty rare. I mean, every sort of big batch of trades that we get, maybe there's one that triggers in and then just hits the full stop right away. And so, I mean, this is looking a little rough here. Um, But hey, it's still and I don't know. This says telecom equipment technology. I'm not really familiar with what these guys do, to be honest with you. So it's not a familiar one to me. But anyway, so this one's looking a little bit rough here because it's in a down cycle. However, um, typically you'll see the initial stop go just below the most recent low. And so assuming that if this thing can stabilize a little bit, if it can stabilize a little bit and not take out that last sort of pivot low reversal day, well then we're okay. So we'll see what happens here. Longer term chart looks fairly decent, and so it's a matter of whether this low holds on this. So we'll have to stay tuned for that. And this one's only been open for a few days too, and so I don't tend to get too nervous about them. Um, if for some reason the market does, if the technology stocks, I guess, start to get hit here, then this is not looking so hot. Pfizer is an interesting one, moving down the list here. Pfizer is an interesting one because the day that it triggered in, and here's the thing about Pfizer is the daily ranges are, well, you can see the 50-cent increments here. It's a relatively tame stock. I mean, if you look at the ranges, they look, recently anyway, they look kind of big, but they're still relatively minuscule. So we're talking, a couple of percent a day roughly. And interesting thing about Pfizer is it triggered in on this long range day here, right? And then the next morning gapped up a little bit and then just basically plowed through the target in one day. Right? So let me make sure. Yeah, the trailing stop hasn't moved yet. And the reason is because the price has come right back to the area of the trigger price. I mean, it's literally like as we speak, the current price is like right back here at the trigger price. And so, um, in order for this initial stop to ratchet up a little bit, the price is going to need to get back up, pull away from the trigger price towards the upside, obviously, and then this stop will begin to ratchet up. So anyway, hey, this would have made for a decent sort of 1 day little trade there because that was a big day, and there was some news that day too. So it's just kind of it's interesting how the news sort of coincided with had this big rally, nice little dip here, and then that sort of retest of the lows, and then started to turn back up. And we see this sometimes where a stock starts to turn back up, and then boy, it just rips higher very quickly. So I was kind of surprised on that because typically Pfizer doesn't move all that much, and so that was a based on its own ATR, that was a pretty significant move right there. Look at these 2 days. Wow, kind of all over the map, right? But anyway, so far so good on this. So theoretically, I mean, and even with the little bit of compensation here, um, I didn't draw the compensation target on this one, but it basically sort of would have made it up there. And so, big 1 day move would have been a good spot to take a partial profits. And so now it's just right there at the trigger price, and so and looking okay, based on today so far, it's looking okay here. So if today was red, I would say, it's looking a little rough. But the funny thing is, when I do these, especially on a Fed day, like what we're looking at here as far as today may or may not, look anything like what the end of the day looks like. So, all right, so we're working our way down the list here, and we got another one that has only been open for a few days too. So what you'll notice is that the system is sort of designed like the old let your winners run and cut your losers short. We're swing trading here, and so we're looking to get in these stocks and be in for a couple of weeks to sometimes a couple of months, depending on and it's the old cut your losers short, let your winners run, as I just mentioned. And what that basically means is that the stocks that don't start cycling up and run higher, they just basically they either hit the initial stop or they'll hit a trailing stop and get closed, hopefully for small loss, relatively small loss, or even a small gain sometimes when the trailing stop moves up. But the winners, I theoretically, well, they do. The winners more than make up for the losers because the winners, we let them keep running and we protect the gains. So anyway, this one's been open for 240. Today's seventh day or whatever. It's just kind of floundering around the trigger price here, and again, this one triggered in on kind of a strange long range day, but basically, as long as that low holds there, this thing can chop around and then form a cup and cycle back up. So everything looks okay on this biotech stock. Um, and so yeah, this one is the final one that got opened in June, and the rest of these have been open for a while. And of course, they're the ones that are doing the best, the so-called letting the winners run. And so, here's the thing about these. You can see on these charts how, it seems like there's a lot of times there's like a week and a half period of time where these stocks will chop around and consolidate sometimes. And of course, think about the overall market. The overall market's been kind of in a narrow, choppy range, not a lot of action, not really, there's not really any good trending action. I mean, on a day-to-day basis, it just seems like it's kind of, we were almost in the summer doldrums already, even though it's June, right? So this market needs some sort of a catalyst to get moving in either direction. But anyway, um, Shake Shack looking pretty good here. It triggered in right over here, little gap up, and then it sort of spent a week or so consolidating around the trigger, and then we had this 2 day move that took it up to the targets, and so now it's hanging around up here at the targets. let's see. I don't when I back in June I was just getting, or I'm sorry, back in May I was just getting started marking everything up on these new charts, and so I don't which are a little quirky as I've explained the past couple shows, and so the initial stop somehow didn't get saved on here, and so no big deal. So there was an initial stop that was probably down, in the low 80s, down around these lows or something. So, but anyway, so here we are, looking pretty good on Shake Shack, honestly. It's poked at this, you know, C target 3 times now. Never closed above it yet, but it's still hanging out. So, I mean, its trigger was at 90 and it gapped up a little bit here, but it still made it to the C target and looking good. And that trailing stop's coming up, and even compared to the gap, the trailing stop on the remaining half is at least at break even now. So it's right around break even. So Shake Shack looking good. As of yesterday's close, it was up about 10% from the trigger price. And going to Intel. The funny thing about Intel is the last couple shows I did here, Intel looked like it just wasn't getting anything going. I mean, if you had pull up Intel and be like, oh, it just looks like it is going nowhere and maybe going to roll over, whatever. And it's actually been able to sort of hang in there, right? And so don't let what the chart looks like today influence. I try not to let it influence like what I think the stock's going to do. So, I mean, unless, we've had a few down days and it's approaching the stop, but this one's kind of hanging in here, right? I mean, it triggered in right here and is basically sort of, made a little progress, and, there was one day where it kind of went below that. But other than that, it's hanging in and just real slowly sort of drifting up. And now, the stop's basically a break even too, and so that's kind of the idea, right? The idea is that the system is going to, and here's the thing, if it, obviously if it makes a lot of forward progress, the trailing stop's going to, kick in and start trailing up under recent prices, but it's a function of price and time. If a stock goes sideways for enough time, the trailing stop's going to move up under the last sort of pivot low there and protect that. And this is a great example of that because you don't see this often. I just mixed that up. I've only had like one cup of coffee so far this morning, and it's hard to drink my coffee while I'm doing this show and talking too. But anyway, so it's a function of price and time, and now that enough time has gone by, the system is trying to get that stop up. Well, it's successfully has actually got the stop up to around break even. So literally no risk in this, and we're just looking for the next move up, which can happen at any time. So Intel, pretty decent looking stock. All these earnings gaps on here are kind of weird, and obviously we're not going to hold over earnings, but this last little cycle here, like in 2021, there's your year to date, real nice rally, and then a little bit of a sell down, earnings gap down, continuation, and then you can't really see this on the chart I have, but let me pull this up. So down at the bottom here, I have my indicators. Look at how this thing sold down, and then this RSI right down here, the RSI got buried down below 20, and when it sort of bottomed out, and then it started rallying up a little bit, and that's when all the oscillators and all the indicators would have basically, they were oversold, and then they started to turn back up, and then shortly thereafter we got our trigger. It was on the pending list well before it ever bottomed out. As I recall, this thing was on the pending list like within, now I'd say within a week of, this gap down, and it looked pretty nasty. It looked kind of ugly right then, but, that's the thing about the pending list is really stocks that have the potential to set up like out in the future, right? And typically, well, I mean it varies, but in the past I've seen stocks sit on that pending list for long periods of time, and this one was actually on there for a few weeks, and then before it turned the corner and triggered in. But so far so good on Intel. Big cap, big name stock or whatever, and so pretty safe. It's other than holding this thing over earnings, that's what I see from the chart. But it's a pretty safe stock, and so it's a patient person stock. Like if you were going to pick and choose on which of these trades to take, then you have to decide for yourself whether you want to be aggressive. And if you were aggressive, you'd probably skip Intel because you know that you're going to be in it for a while, and it's not likely to make any, really big moves in any short amount of times. And so, and at the other end of the spectrum, there's some stocks that are extremely volatile, and when they trigger in on the pending list, we're showing the monthly ATR there, and so that's where you get an idea what kind of volatility to expect. So Intel's usually a pretty safe bet, but you just have to be patient with it. So and everything's about percentages, right? So all right, moving on. SLAB. This has actually been one of the ones that has really been doing well. It's almost ideal. This is, if I was gonna say, hey, this is what an ideal sort of trade looks like. And the reason I say that is because it triggered it. Well, honestly, it gapped up a little. It gapped up a little bit more than you'd typically want to see. But it's an expensive stock, and so. But what I mean by ideal is that it triggered in and then basically went straight to the targets without looking back, and even compensating for the gap, straight to the target, and then begin to consolidate a little bit at a higher level as the trailing stop came up, and then after week and a half of consolidation is breaking to the upside, right? And so it's making the move to the upside, and this is what I mean when I said, sticking with the winners, cutting the losers short and sticking with the winners, because this has a lot of potential. So, it was up, at yesterday's close, it was up 10.6%, right? But these are the ones that have the potential to, like, some of the close trades you see that are up, like, there's been a few that managed to get like 30%. So this has a lot of potential, especially the way that it's acting now. It's kind of, it looks like maybe it wants to consolidate for a while around this level, but if it ends up forming like a big cup here, if this like is gonna cup up to, which it has the potential to, back up to these levels, then we could stay with this for quite some time. And so the trailing stop is obviously designed to hang back enough to allow for, and that's exactly what happened over here, allow for like a normal sort of consolidation or even a pullback without getting knocked out, right? And that's exactly what happened over here. And so now it's, on to the next level, looking pretty good. So moving on, there's only a couple more, and this is a lot of open. Whoops, I didn't mean to do that. A lot of open positions for us. This one's kind of weird. This Brooks PRI Automation. I remember when that was two different companies, but it was like Brooks Labs and semiconductor equipment manufacturing. So. Yeah, kind of self-explanatory. The weird thing about this is that it never quite made it to the compensation target, which you guys know is compensating for the difference between the actual trigger price, which is right here, and what would be the entry price if you bought it based on the exact sort of set of rules that we have laid out, which means that you wait for a daily close over the trigger price, and then it becomes a buy the next morning at the open, regardless of if it gaps up or down or whatever. And so, I explain this each week that the idea here is not to buy at the trigger price. The idea is that that's sort of the price level the stock needs to close over um, in order to trigger us in. So anyway, and not too bad here. Regardless, it's actually a little bit. It's like right around the actual entry here, but obviously you can use a little discretion, and so um, you can use some discretion in cases like this. Like there was maybe a little opportunity. Now, if you were playing it strictly by the book, we got a little thwarted here because it never quite made it to the target we wanted. So if you had a limit order in, you wouldn't have gotten filled. And it's not a bad idea to just have limit orders in and do other things. So this system is designed to be kind of hands off, and you don't have to do a whole lot, and it's not like there's a lot of really super active crazy trading there, and we basically designed this to be like sort of an automated hands off type of set it and forget it type of things, and type of swing trades where you don't really sweat the small stuff, and you don't really have to babysit anything. You can theoretically, all you have to do is just manage the stops and the targets, which you can do with limit orders. And of course, when we started this, people still had to pay commissions. Now that there's no commissions, that's really made this even easier because it's no big deal. I mean, it's no big deal to buy, fewer shares of an expensive or a high price stock, I should say. Fewer shares of a high price stock. And with the entries in that, we have different entry strategies, but you can split up the entries. Obviously, the idea is to split up the cells too, and so it's not that big of a deal now that we're not paying any commissions for all this, right? Um, and so, but theoretically, all you have to do is just manage the stops. This stop ratcheted up relatively quickly, once a few days after it triggered in and it actually hit the regular target, this stop came up and it's just been going sideways ever since. It hasn't moved the stop hasn't moved to the next level yet, but at the same time, we're basically at break even here. And so so far so good. It's kind of like it's kind of like Intel. The stop is at break even, and so no sweat on this. Even if it does come down and hit this raised trailing stop, totally no big deal, because one of the things that I know Jeffrey's always, ever since all in the decade I've been working with him or more, he's always talked about break even trades and getting to break even, and that was always his big thing. That I was never really, that hadn't really entered my thinking 10 years ago, about getting stops to break even, and then not worrying about getting stopped out at break even is just like a wash. And so, but it makes a lot of sense, because if your number one goal is to get your stop to break even, right? Then what happens is that you're going to have a lot of trades that get stopped out at break even, and you think, oh, geez, well, that was a waste of time. But it really wasn't, because what you're doing is you're putting the odds in your favor, and you're setting yourself up so that the stocks that really do well are, they're not going to get stopped out at break even, and the ones that don't follow through in the direction that you wanted are just going to get knocked out at break even, but you haven't lost anything. And so it's really something that you don't hear that much about. I guess I hadn't heard that much about it, but getting stops to break even. If that's what you do, then the ones that work. The ones that don't work, you're not actually losing money on. So it makes a lot of sense when you see it. When you see, and this is not a good example, you see a stock that you buy, it takes off or whatever, and then you think, oh, okay, this and that. And if you just leave your stop all the way down, what happens is you get a profit, and then it comes back down, and instead of getting out at break even, something happens, the market rolls over, whatever, and then it turns into a loss and it hits your big initial stop. And so this system is really, it's the magic of this whole system is the trailing stop moves. And so that's what's happening here. So if we get stopped out at break even, long story short, no big deal, right? So last but not least is good old Twitter. Twitter is, let's see, Twitter's been open since 520, which is, what triggered in on 520. And so here's the actual entry right here. Looking pretty good. Looking pretty good. It hit the compensation target. It's floating around, it's sitting right in between these targets right here. And so this is another one that's pretty ideal. This is the one that the past three that we just looked at have been open the longest, and Twitter is actually the biggest gainer of the whole list as of it's up almost 1% today, but as of the close yesterday, it was up 12.6%. And nice little trend going there. So I did mention when it was just triggering in, I mentioned that if it got up here, if it was able to get up here into this gap, that it was going to probably look pretty good, because what happens is, these stocks, they get up into the gap and they have a tendency to get, sucked up into that gap to close it. So as long as, and of course, here's the trailing stop, like hanging back here. And so as long as this thing sort of maintains its uptrend, it's going to look pretty good here. Yeah, I could probably draw a trend line up across these lows here, and you could see that obviously the trailing stop's going to be outside that trend line. And so far so good, right? And the idea here is that you see these sort of, so this trailing stop, I mean, the way that I have the lines drawn is kind of arbitrary. Like I don't always, it's very difficult to start the line. I guess I could try right where the trailing stop is, but the idea here is that after this little consolidation and this pivot low, so on the update the very following day, that's when this trailing stop would have ratcheted up to here, right? And so I mean, I have it extended to the left by 1 day or whatever, but no big deal. So anyway, that's sort of the idea. And then, a little bit more further progress, and then the trailing stop ratchets up again just under that. But the idea is that it's going to attempt to stay far enough away to allow for a normal sort of price pullback, a few day pullback, little consolidation, whatever, and not get knocked out and sort of stay in for the bigger ride, while at the same time, basically maintaining like a trailing stop under a series of higher lows. And that's a little bit difficult. I mean, it's a little bit difficult, and this isn't the greatest example in the world, but we've had some better ones in the past, over the past couple of years. But that's sort of the idea of it is, and so, automating and calculating where that trailing stop goes and when it moves was a big thing, and it's been working really well. I mean, and so in theory, I mean, you can trade these completely mechanically. Right? Completely mechanically. The only little extra bit of work that you got to do is figuring out the compensation, calculating the compensation target on them based on your actual fill, right? So in this particular case, the trigger was at 53.50, and on the day it triggered in, the open was 55, and so that was $1.50 more. Right? And so basically, it just added $1.50 to the target. But, say that you got triggered in, $1 over the trigger price. So you got triggered in at 54.50, like this day. It opened, and then a couple of minutes later, you're like, yeah, I should probably go ahead and take this trade. And so you pull the trigger on it. You get filled at 54. Well, then all you would do is just add $1 to the target to compensate for it. So your compensation target, compensating for the gap over the trigger, would be 61, in which case it got hit, right? So, it got hit. And so, and then the idea is that you want to take half off. You want to take half the trade off when it hits the target and let the rest ride with the trailing stop. And so, it's just a little bit of effort and work, just figuring out the numbers at first based on your particular fill, because everybody's going to get filled at a little bit different price anyway. That's just the way things work. And certain discretion comes in here. Like, you don't have to take every single one, but in theory, you could trade this system purely mechanically. And the great thing about it is you don't have to spend a lot of time fooling with it. So that's one of the real big benefits of it, is that it's kind of a set it and forget it type of thing. Really low stress. You don't really have to worry about anything. And then over big series of trades, that based on the way that we do the trailing stops, you're almost never going to take a big stop out. See, that's the thing. A lot of people, will talk about using stops and that, but they'll set an initial stop and then they'll just let the thing go, and maybe they'll trail it up once or something. Trailing your stop to break even and just leaving it there, that's obviously viable, but the way that our system it was designed is that trailing stop's going to tighten up. And then when you get these stocks that have really big moves, right? Like, you look at the last charts of the last couple that went up like 30% or whatever, you'll see that the stop starts to get really aggressive when the stock makes a huge move, and so that way it's able to lock in the profits. So that's what it's all about. It's all about managing the stops and getting in right when, well, theoretically, when the stock has a pullback and then begins to resume the primary uptrend. So that's all in the documentation. You guys are familiar with that. So I'll quit talking here and let you enjoy the rest of the day, because it's Fed day. And so anything that happens before, 2 o'clock today is basically meaningless, right? So whatever Mr. Powell, whatever the Fed decides and Mr. Powell says is going to sort of be the affect everything. And so we're going to see a lot of craziness, right? Like, my guess is between 2 o'clock and 3 o'clock, we're going to see a lot of craziness in the market, but it'll be interesting. It'll be interesting to see, what he says and how the market reacts. So anyway, thanks for tuning in. I will see you back here same time next week.